There we go. And we are live. Now, if memory serves me, there is a short delay on this. So we like to give everybody a minute to get in. But rather than just ask where everybody's joining from, we're going to go a little kooky. On our prep just now, we were talking about hot dog eating contests and discussing the merits of, is there a better food that could make competitive eating contests easier? So, if you want to chime in, you are welcome to in the chat. You also do not have to because it's a very weird question. But if you had to do a competitive eating contest, what would be your food of choice? I think we ruled out saltines and graham crackers
and cinnamon
and marshmallows.
There were some newly discovered dangers with that last challenge,
right? Yeah. But we discovered we talked that hot dogs were probably not the best choice for that type of competition. So welcome to, I think everybody's probably in the room now. So welcome to the July Fireside chat, where I'm once again joined with the amazing team at FifthWall Solutions to talk about all things cyber insurance and whatever else we get around to. We did a little bit of talking ahead of time. We do like to keep this session specifically very, very open and do a lot of Q&A here and really make this an office hours thing. So as we're talking, if there's something that you really want to talk about or hear from the experts on, you can put it in chat, or there's the Q&A function. If there's a really great question asked in the chat, I will move that over to the Q&A for you, so you don't have to remember where you're supposed to be. So we have a few polls here. I think let's go ahead and do the first poll here and talk a bit about tech E&O. So, should MSPs have a tech E&O policy? Yes or no, guys?
I feel like Andy, being our resident tech E&O expert, should start with that. So go ahead.
Yeah. So yes, I mean the cold answer is yes. But we also understand. We were talking before we hopped on here. MSPs are especially new fledgling growing MSPs. They're on a journey, and what I've seen in my experience is kind of this building experience where a lot of smaller MSPs that are just out. I mean, they got a million things going on. They're trying to grow their business. There are quite a few of those folks that come to us that don't currently have tech E&O, right? So obviously, we encourage them to get a policy. A lot of times, what they'll do, kind of the first step would be to go to their local insurance agent, maybe the carrier that does their property and casualty insurance, like their building insurance or their work comp, and go through like a Hartford or something like that to get professional liability. And then a lot of folks will go out to, maybe attend a webinar like this or go out to an event and hear somebody speak on it. It's like, you probably need a little bit more mature of a policy. So then when they land on our doorstep, for those smaller MSPs, we take them out to markets like CFC and USLI and Tokyo Marine, right? And try to get more comprehensive coverage. And then as they grow and they move, we start looking at increased revenue means higher limits, maybe some more expanded, more robust coverage. But yeah, that's kind of the growth mode around E&O, but it is absolutely a key coverage for MSPs.
Let's I think it's good to define terms here too. There are a lot of times that we've had MSP partners come our way saying, "Oh yeah, we've already got E&O,
Mm-hmm.
we've already got E&O coverage, we got tech E&O," and then they're saying, "But we do need cyber liability," and that immediately kind of throws a flag for us, because if you had a good tech errors and omissions policy, you're going to have cyber liability coverage built into that. A lot of times what we'll see is an errors and omissions. So general errors and omissions. I mess up in my professional life and I have coverage for that in the event of lawsuits or things like that. Then there's this tiny little add-on in that policy that says tech risks. And sometimes that's good. Most of the time it's not good. It's saying, hey, you have tech errors and omissions. Oh, that's great. But then you actually look at the limits, you look at what it's actually covering you for, and it's pennies. It's not helpful. So we're big advocates to answer the poll question, like, do you have tech E&O, or do I really need tech E&O? The reason being is, hey, your main job as an MSP is providing tech services. So if you're going out there and you're providing tech services, the chance of messing up increases if that's the only thing you're doing. So if you mess up, tech errors and omissions is good to have. But on top of that, your work is entirely digital, and therefore you are also presenting that cyber liability risk to yourself and to your own network. So that good policy is saying, hey, we're going to help you through the potential mistakes that can be made, but also should there be an incident for your own network, we want that to be covered too. So those two kind of sit on top of each other.
No, that's and I mean, not to beat a dead horse, but well, I mean, this popped up this morning. I was on with a small MSP, and the guy had coverage, had the professional there, had the cyber, but his primary concern was, if I have an event, what if I lose my key customers, right? Like, what if they walk on me, you know? And that's reputational harm, right? Like that's a very specific line item of coverage that he didn't have on his policy, you know? So just walking through those things, you know, what are your concerns? Like, you know, yes, E&O is the liability piece. It's if you get taken to court, it's for if you screw up, right? But like for this guy, that wasn't his primary concern. His primary concern was like, what if some bad pub gets out there and I have, you know, my key clients go to a competitor. Well, his primary concern wasn't covered by his current policy.
And I'll add my 2 cents in here too. To those that are still questioning, you know, hey, what do I need? And does this make sense? Sometimes the process itself of getting tech, you know, can be really, really valuable as well. And here's what I mean. From an underwriting perspective, you get a lot of folks that, you know, they're trying to look at the exposures that you face. And, you know, there's exposures that they are willing to take on, and there's some that they're not. But things like contractual liability, right? A part and piece of what all MSPs should really take seriously is the level of sophistication and maturity you get as an MSP. That demand is going to get higher from an underwriter, right? They're going to want to see you be more robust around handling contractual liability and reviewing those MSAs and requiring certain parts and pieces. And so, yeah, my 2 cents is sometimes just the experience itself can be very beneficial, because I think a lot of folks are out there wondering, you know, for their own business, what does good look like, right? And there's a lot of costly services that you can go into, and, you know, hiring attorneys, which eventually you will need to do. But this is an exercise going to be really helpful just to at least paint a picture around what good looks like.
And speaking of what good looks like, there was a question from Terry A. I actually moved it over to Q&A because I think we should answer it. And one of the reasons why I don't know how this works, so I just published it as a Q&A, if that's a thing. I'm just pressing buttons, and I apologize for anyone in the background who's like, Will, what the heck are you doing? I'm just doing stuff.
You're on with a bunch of MSPs, man. Don't say I'm just pressing buttons. They're all gonna leave.
So
I don't know how this setting happened. Okay.
I told you I just clicked buttons. What's the most important parts of the policy, the must-have? So, Terry, that's a great question. Actually, if you click the little handouts tab at the top right, I've actually included a document. It's a PDF. It's called Cyber Insurance Coverage Insights. And that has all of the coverages you're going to see on a comprehensive cyber policy in plain language with real-world examples. It's going to be helpful but also for your clients. But what are all these coverages? What do they mean? Because there's no standardization across carriers. They all have fancy names. Some of them try to be trendy. Some of them are just saying it as it is. It's all over the place. So you have that. And then on top of that, the other crucial coverage we brought up is that technology errors and omissions piece. So if you were to look at this coverage insights form, you want to see all of that. And maybe, Andy, you can get into your sublimits piece in a minute here, but you want to see all of those things, plus that additional tech errors and omissions. That's how you know you have a good policy. If you're missing any of that, you might want to have a conversation with your agent for sure.
Yeah, and I mean, on the cyber end for clients, you want to see at the basic level, first party, third party cybercrime, like all of those should be there, right? You want the first party limits and the third party limits to line up with the aggregate if it's $1 million or $2 million. Cybercrime is going to be sublimited. That's standard. It's going to be 100K, 250K, something like that. We really like to see 250K, right? So you've got that on the cyber piece for clients. E&O is going to have, you can copy and paste that and do an E&O. It should all be there. Then you should have the professional liability, right? And then there's some media liability thrown on there. Kind of just to talk about things that are going on in the industry right now, kind of the hot button topic with the CDK global breach. I would assume that most folks on the call, if I say CDK Global, are going to be familiar with what's going on with auto dealers nationwide. That's a line item called dependent network interruption, right? Those auto dealers didn't have a breach. It wasn't their loss, right? It was a vendor's loss, but it affected their ability to do business. Some of them to the point to where I know Will and Wilson on our team had stories of people just sending folks home for days because they couldn't sell cars, right? So dependent network interruption is kind of a key coverage hot topic right now. That's one of those coverage that's either excluded or highly sublimited. To Will's point, if this stuff is so complex and it's so, there's no standardization as far as what the form has to have on it. There's no standardization of language, being able to dig into that and understand, like, what's my third party risk? Am I highly revenue dependent on somebody else? And if they go down, will I be indemnified for that period? Those are the questions that you want to ask.
So Evan asked a question here too about what's the best way to shop for tech E&O as an independent consultant. Hearing what you just said about lack of standardization, lack of definition, it sounds like even from some of these as to what, when you really dig it apart, like, do I have to be wearing my red hat on a Tuesday to be covered? Like, the nuance of that. So what is the best way for somebody to shop for tech E&O insurance? Andy?
I don't know where I'm
this
pointing
way
on everyone else's.
Is this right?
I figured
Andy's right above me on mine.
And this is kind of in general. This isn't just E&O. It's cyber too, right? Work with somebody that knows what they're talking about. That specializes in it. And that doesn't listen. It doesn't necessarily mean FifthWall. I know I'm going to sound like a homer here, but there are other agents. There are other people nationwide that specialize in it, right? But what I would say don't do more than what you should do is, like, don't run to a generalist and say, hey, get me E&O, and they come back and say, well, here's your professional liability policy, right? Peel off with somebody that knows the markets. Like for us, for example, and I alluded to this earlier, and I don't have to go into the weeds, but like, we have a very significant cutoff at 20 million. Like there are certain markets only that will play with MSPs over 20 million, right? There's kind of a middle market of 5 to 20 and folks that are competitive and like to play there. And then there's a sub 5 market too, right? So it's about, working with somebody that understands your risks, because consultants and MSPs, and Reed, you can probably speak to this, there's a little bit of a professional difference there between a consultant and an MSP. But then also too, within that revenue band, what markets like to play sub 5 to 20, and then 20 and above.
I think one way too to be helpful to the person that asked that question is, there's the what, like, and where do you go, right? And obviously this is what we do, but there are others that do this. It's just it's a niche, right? This is something that most agents, it's a sidecar to the main dish. And so a good way you can kind of get a gut check on, do you know if you have the right thing? It's what was the process that you experienced? Because for us, I'm just using us as a benchmark, like, we're going through the process to actually educate on the parts and pieces of what this is, right? So to help an MSP and sit down with someone, any risk, any client, and go, hey, here's what this is, and actually go through it from a place of expertise and knowledge. So we're educating. That's a huge piece. That's a big green flag, right? That means if you sat down with an agent and they said, hey, I got you a tech E&O policy, and then they actually walked you through what it does from a functional standpoint, then great, right? I'm not saying that that's a guarantee that they brought you a quality product, but that's someone that has the confidence to actually dig in, answer questions. If you're working with an agent and they go, yeah, here you go. Do you want to sign the application? Like, we need these pieces of information that's run you through a quick process. I'm going to go ahead on a limb here and say that you probably didn't get a quality product. So the experience really does matter, right? We take that very personally, but I think that's something that's trending slowly but surely in the insurance industry, where agents are developing more acumen around the specific piece. And this is one of potentially 50 tentacles a generalist could be operating in. So it's, as you could guess, it's probably not like very, very common, but there are those out there that are taking this approach.
Part of the challenge in this in general that we see, and I made a joke saying there were 6 cyber insurance agents out there that weren't FifthWall employees, but it's not really a joke. Like, there's a very tight niche community on LinkedIn of cyber insurance agents, and I can count them all on two hands. Like, there's not that many. We're hiring an account manager at FifthWall, and I scoured LinkedIn for insurance people who are good at cyber, and there are not very many. And that's not to say, or not who aren't good at cyber, who don't focus primarily in cyber, right? And that's kind of the challenge here, because for MSPs, I mean, every year, if not every quarter, if not every month, you have to consistently be looking at new security options, new tools, the new attack vectors. There's so many different elements to cybersecurity that are rapidly changing, and insurance has to change to keep up with it. And the problem is that when you have a generalist agent out there, you run into issues where they're working on other lines of insurance that haven't changed in 30 years, and now they're looking at cyber and they're saying, well, I don't really want to commit that much time to this. I mean, I don't blame them, especially when they have these other lines of business right now that are bringing in a much larger piece of the pie for them in terms of revenue to their agency. But on your end, like I said, when your business is primarily in the technology space, there's no room to play around with the realities of what's covered on that policy. So finding someone who is, and I'll shill for FifthWall because I work here, but ideally finding someone who primarily focuses in cyber is so crucial because of the rapidly changing nature of the industry. For anyone listening in today, I'm just going to throw a link in the chat here that is, we just want to offer a tech errors and omissions policy review for anyone listening in. So it's not a commitment for a policy or anything like that. But if you go to this form, you can attach your policy if you have one. If you don't have one, you can have a whole conversation about it. Andy, I checked with John. It is linked to your calendar now. So you'll jump into a conversation with Andy, and he'll just be able to go over your policy, make sure it has all those things and bells and whistles we were talking about. And if you don't have one, you can ask him any questions. We'd be happy to do that for you guys.
Yeah. And full disclosure, Andy has like 9 meetings tomorrow and goes on vacation on Monday. So if anybody needs a review, we can get you hooked up. It might not be with Andy for a week or so.
True. But either way, it's that making sure that you're approaching a conversation, whether it's with your agent who you've been doing business with for 20 years and they're your dad's brother's best friend. I guess that's your uncle's best friend, or it's someone who generally focuses in cyber. I'm sorry, guys. I'm a verbal processor. My brain's like this.
I love it.
Yeah.
We have a question that I can jump to if that's
Please.
appropriate.
Please.
So Terry asked, if you have an incident, what does the policy require to file a claim to be efficient with a stressful situation? Which I think is, any possible incident is a stressful situation. I think this is what you're asking, Terry. So let me take a stab at it. But just as a overall just education piece of this, to file a claim, it doesn't require anything other than notification. So you don't need to have evidence. That's actually not your job at the get-go. And let me dispel some I don't want to say rumors, but I think there's a lot of stigma around filing a claim around cyber. Like, hey, if you just provide notice, that's actually a bad thing. No, that's not in fact true. A lot of carriers are now incentivizing early notification. They're incentivizing you to put them on notice, even if it doesn't result into a claim, because they are very aware that time equals money. It's their money. So if that client has a comprehensive policy, there's 99.99% probability they're paying out soup to nuts on what's going on. That's good for the client, right? And they also know that the time that is they can't get in there and do forensics and start the process. The issue can only get a little bit worse every moment. So no evidence required. Notification is required. It is up to then the insurer to ask for needed information, right? That's part of their process. It eventually goes to more full-fledged forensics, which is a more invasive way to get the who, what, where, when, why, how. But a lot of the initial things that we recommend to MSPs, because I think there's a little bit of concern around like the crime scene that is forming, and insurance wants to come in and they don't want to feel like they've messed something up. Isolation and containment is never really a bad idea. We've never come across a situation where, an insurer says, you isolated and contained, parts or pieces of the environment. Like, that's not a bad thing.
Wait, you made it so I have to pay less on this incident?
Yeah, exactly. But if you were like, yeah, we went ahead and we restored from backups, they're going to be like, oh, well then, like, did you verify, this, that, and the other? That's where we've seen issues come into play. So hopefully that answered your question. It's not necessarily you need to bring evidence to justify a claim. It's really the insurer's job to start that forensics investigation.
That said, we get a lot of MSPs who come to us and, they're pushing a SIM tool, or they're saying, hey, I want my clients to engage in good log management, log keeping for their systems. And the hard thing is on the carrier side, right? From the carrier perspective, they're not saying, hey, you need to have a SIM tool, you need to do this thing, X, Y, and Z, right? But on the other side of that, from a claims process standpoint, the more information they have, the faster this is going to get processed. So when you're having a conversation with your clients about logging, you can bring up the insurance component. I mean, incident response component. Have those conversations with your clients. Don't stray away from incident response in those conversations, because the more that you can do to both prepare them for incident response, but also clean up the mess and provide, it's not providing evidence, it is kind of providing evidence, right? But it's also saying, hey, we have the steps, we have what happened, why this happened, where the endpoint, we have all that information. And to be able to turn that around to the forensics team when they come in could be extremely helpful. And you can paint the picture with clients that, like, the average ransomware is 14 to 16 days. So if that's the case, imagine you can make that shorter because you have good logging. It's that kind of conversation. So we get that a lot. Just wanted to throw that out there too.
Yeah. And to extrapolate on Reed's point a little bit about working with somebody that knows what they're doing, cyber insurance over the years has been very push button, get banana. Here, fill out these 5 questions. Here's your policy. Do you want it or not? Here, fill out this 5-10 page app. Here's your policy. Do you want it or not? And what that's created is this landscape where the end user goes, okay, I need to check these boxes to get insurable and I'm good, right? Well, the problem is that insurance underwriting is imperfect, right? And to Will's point, like our planning right now in our world is not highly valued for premium reduction or the ability to get a policy, right? So back to Reed's point, working with somebody that knows what they're doing, that's in cohesion with your MSP, you may have MFA, you may have EDR, you may train your people, you may get a great premium and your policy is going to get bound, right? But if somebody in that conversation, insurance agent, MSP, internal IT, doesn't say, hey, while we're in this process, let's talk about our planning. Do we have a customized plan? Is it offline? Is it regularly updated? Have we tabletopped it? Is the insurance policy attached to it? Is it in a folder somewhere where it's accessible in the event of, a cataclysmic event? Like, going through that process may not save you premium. It may not get you a ton of credit in the insurance market, but God bless, it's absolutely a best practice while we're going through all this.
And knowing what you've seen over time with insurance changing, it feels like some of these process pieces have started to be included. Do you see, kind of reading the tea leaves ahead, knowing that it depends is a standard answer in all of this, do you see a future where that is a requirement and somebody's reviewing those?
We've talked about this. It's the progression that we saw with MFA, EDR, MDR, you could kind of see that stuff coming. We had a scenario recently with a manufacturer that was they jumped from 30 million in revenue, 30 something to 65 million in revenue, and they needed higher limits, right? So the carrier said, we want to see EDR on. Well, we had consulted with them for 2 years. They already had EDR on. They were good to go. And it was, again, because you kind of saw where the Frisbee was going and not where it was at back in 2022. To that point, absolutely. And I think, honestly, not to chase too much of a rabbit or a squirrel on this, but one of the things that I think prevented insurance carriers from really looking over IR plans previously was the fuel that they would have to burn in order to read through a 30, 40 page document. Well, guess what? GPT's here now, right? We've got AI. So, we should progress into a scenario where send us the PDF, ask questions about, is this customized? It's not just a template, right? Is it located offline? Is it accessible? Have you tabletopped it, in the last year? And then, have AI read through that thing for the high level needs. Absolutely. I think I could see the future with that.
It comes down to, like, there's operational efficiencies and inefficiencies right now with insurance, right? This is completely novel for this industry because of the way things, you have, for the most part, pretty static types of exposure that you're evaluating, outside of cyber. Like, a house isn't really going anywhere. It's not really advancing. The materials it's being made of is not really changed drastically. How it interacts with fire has not really changed. So these are all components that don't require a lot of evolution. And with cyber, both sides of the fence are changing, right? And so it's kind of a cat and mouse game. With carriers trying to do what they're doing in the enterprise market versus the SMB market, it's very different. The enterprise market, they can operate with, they can be far more meticulous. It's kind of like they're moving, they can move a little bit slower because they're taking a lot more risk. It's justifiable. The ROI is justifiable. The premium's higher. With the SMB side, it's higher volume. They're trying to reduce high churn, but it's high volume, and how do they stay scalable? And so if you look at the practices and the procedures, I say this probably on every single call that we're on, Becky, but don't forget cyber insurance in general is organized gambling. So they're trying to figure out how to best place their bets. Okay. And the best way they can place their bets right now is to figure out how they can still gain volume, right? They still want to write policies, but they don't want to take losses. So that can't be too labor intensive, and it can't be cost prohibitive from a process standpoint. But to Andy's point, that's all changing, right? As technology is advancing, and insurance being pretty far behind the 8 ball from utilizing technology standpoint, they're catching up. They're slowly getting there, slowly but surely. And so we're going to see, the bar probably get higher, but mostly because they know a better way to actually evaluate that high bar and assess that high bar.
Part of the issue, and we bring this up a good amount, is that cyber insurance really in the world of insurance, cyber insurance is still kind of a baby. I did a post about this today, actually, that you could look at those applications your clients bring you, and they're ridiculously long. They're not that clear, and there's a ton of stuff. So you're looking at it saying, what security controls should I really be encouraging my client to adapt to buy? Because there's this laundry list on these 13-page applications. Which ones do I choose? And that's part of the challenge. And there are kind of the core controls that are out there, MFA, EDR, MDR, having a backup solution, security awareness training, vulnerability management, patching solutions, things like that. That's all really crucial. But the reason it's crucial is because carriers over time have claims data. And that claims data has shown them that people who have these things, to Reed's point, organized gambling, showed fewer incidents, fewer claims, or less expensive payouts on those claims because they had these things in place. So all this other security that you're probably looking at and saying, this is crucial, this is important, you need to have this. You're absolutely right. The problem is that the carrier data hasn't caught up yet. So they're not saying those things aren't crucial. All they're saying is that those things are not yet required by us because we don't have the data to back up how crucial they really are. So as that data becomes available, you're going to have more opportunity you're going to have more leverage to get those things in place from the cyber insurance perspective. But why wait is kind of my push. Is if you know it's important, if you know that it's going to be beneficial and helpful to the incident response process, to the security side of things, to protect the client from an incident, then the conversation can be had. And you're just getting ahead of the 8 ball there, so that when cyber insurance does require it, guess who sees a cheaper premium? Your client, because you already got those things in place. So there is that opportunity.
That's a solid point, though, about the actuarial data piece of this. All insurance providers hire very well-paid actuarial staff to manage this, and that is a very robust course to go through. I have a relative who actually is a grader, like an actuarial test grader, and the process of that is insane, and the data that they have to know how to consume. So not having that data speaks volumes to why we see this moving. And in the history of technology, this cybersecurity is still relatively new. Like when you look through the life cycles of technology, so a lot of it's not there, and because it's changing and there's constantly new threats, and it's not the same thing. Reed, to your point, fire, like how fire consumes a house, hasn't changed that much. How a hacker gets in how they move around, all of those things changes so quickly and so often that data piece really does drive a lot. So if we can do the second poll, talking a little bit about the cost of cyber insurance, there's also a question in the Q&A here about how would you get favorable rates? Let's see, I'm going to answer so that goes off my screen. How would you get favorable rates for a cyber or E&O policy coverage? Are there proactive items that you can complete or prepare so that your policy is not overly expensive and justifiable? I'm guessing that's where working with a broker becomes really important, working with a specialist.
I'm going to let these guys answer the specifics on cost savings. I just want to say one thing about actuarial stuff, because I was a math major in college and actually wanted to go into actuarial science until I learned what it was. And I was like, this is terrible. It's mathematical. This is not your grandma's card counting in Vegas. Like when we say organized gambling, this is like mathematical proofs over the course of, trying to figure out ways to best understand the data. So when we bring up cost savings, the reason this cost savings exists and where you can find it is because they have these meticulous formulas that they've put together that show when these things are in place, we can usually charge a lower premium because we're probably not going to pay out as much on the policy.
Yeah. And I can speak to the question, Becky, that on the favorable rate side for cyber or tech, or both, there's a short list that we've come up with, and we've done that through distilling multiple carriers' applications and getting their temperature on certain things and what their appetite is. But that appetite changes all the time. And here's what I'll say is, if you're trying to be proactive, right, which means I think there's two parts of it. You're trying to understand what your current state looks like in relation to what cyber insurance or cyber insurers see you as, and then what do you need potentially your future state to look like. Those are investments, and I think part of the exercise is you're trying to find out where's the ROI of my investment, right? So if I'm going to invest in something and I need to be a certain height or I can't get on the ride, right? So like, how tall is that? And if that's the mindset, my recommendation is don't go off of the list, right? It would be talk to someone that can actually match and do a gap analysis specific to your business to showcase this is specifically what you would want to look at rather than generally speaking what, we've done this before. Keep in mind, we're looking across an eclectic book of industries. We're looking across businesses of all shapes and sizes. So there are basics, there are core controls that we do talk about a lot. We've talked about on this call before, Becky. But that's, my recommendation, if that's a question you're asking yourself, is I think, I'll tell FifthWall, this is what we do, but you want to work with someone that can have that actual analytical approach. We'll look at current state, describe where you are currently, benchmark to insurance. Insurance is kind of becoming a level of compliance, dare I say. And so you're kind of seeing, how do I stack up to this newfounded level of compliance? And what is this compliance saying today versus what it was saying yesterday versus what do we think it's going to say in the future?
And we've got, again, not shilling for FifthWall, but it's one thing to sit here and talk about this stuff, conceptually on a call and everybody listen to it. But like, we've got built out case studies that we can share with our partners that walk them through. Mm-hmm. Our hospital case study, for example, initial quote for $5 million, $141,000 a year later, and a $38K investment in MFA and security awareness training, $53,000. So a $38,000 investment in those two controls, $88K savings in premium, right? Manufacturing case study, I already mentioned it, right? Consultation about like, hey, you guys are growing. You're not required to have EDR now, but there's going to be a day where it's going to be required, right? And what we're seeing right now in the industry, where we were in 22 with EDR, we are right now with MDR and privileged access management. So those are the conversations moving forward, right? It's like, we're going to need, if you're growing and you're heading in this direction, the roadmap needs to look around, needs to be around 24/7 monitoring and some type of privileged access management tool, right? So we have, physical case studies that'll speak to that. If people are, I'm an old teacher. I just, I think about the audio learners versus the video learner, tangible learners and things like that, visual learners, sorry, is what I was trying to get to. But we've got, written PDFs on that stuff.
And on that note, though, Andy has some, he was bringing up the case studies we have, and those are fantastic. But for you MSPs who are listening in, who deal in like the primary, like SMB, especially the like small business market, cost savings is a lot harder to find from a particular carrier.
Yep.
Because what Reed was bringing up before is he's like, they're already cutting you a massive break on premium just because they're doing kind of tons of, I mean, they're just writing a ton of you, right? I mean, they're writing a ton of these small businesses. So the premium breaks are coming less from saying, oh, if you enable this security control, this carrier is going to save you X% on your policy and you're going to see a massive drop in your premium. You may see little bits, but when you're paying $2,000 for your policy, you know, if you see 100K to 60K, that's a big jump. But taking that exact that same jump from a small business perspective in premium, it's not going to look the same. So really where the benefit comes in is less in the, oh, get these controls because you'll save X%, and saying, hey, get these controls because what that's going to do for you is open up the entirety of the cyber insurance market for your disposal. When you have more opportunity, when your security is good, more carriers can be approached, and then they get competitive. If they can't be competitive, if you're saying, hey, your security is not great, so we can only go to 2 carriers, guess what? They're the ones who charge the most because they're saying risk isn't good. We're going to charge a lot of money. If the risk is good because the good security is in place, now you have 10 carriers vying for that business. So you're going to have better options in terms of premium. And that's the other component. We were talking about agents before and the brokers approaching markets. Most brokers down the street who maybe you have partnerships with through local networking groups or things like that, usually they only have access to like 4 carriers. Then they're going out to wholesale markets, but they're not going to approach those wholesale markets unless they have to. And that's where things can get a little dicey. So you want to make sure the carrier that the broker you're working with is willing to approach as many markets as possible every single time, and then you can open up the conversation and say, let's get your security to where it needs to be, so you have full access to the market. Is that clear? That's kind of where I wanted to kind of go on that space. And then can we bring up the poll response? If I hit max, I'm not going to do it. I'm gonna let.
Cody, how do we show?
Cody, can you bring up the poll results?
There we go. Thank you.
So I actually asked this question because I wanted it to be a trick question, and I'm actually proud of 26% of you. Data is coming out that for the first time in like forever, premium in the past year at renewal time has actually kind of stayed the same. It's like a net zero increase in premium cost, which is crazy when you first think about it. But I think Andy, we did a video on this last week. So the reason is twofold. One, people like you are putting better security in place for these clients. So they have better security, which is awesome. And then on the other side of that, carriers are being competitive. So again, if the security is good, the carriers will compete for pricing, which will bring the pricing down, or at the very least, keep it where it needs to be. Brian just put up a good point there. He says ours actually went down. That's my point, is when you force competition because you're getting better security in place, now you have carriers who are willing to come in at lower pricing, or at very least remain the same on the renewals, right? And that's the mindset that we're approaching here. So, but I'm not surprised that 50% of you said increased, because for the past 4 years you were getting things like 4 times the premium the next year. Like, it was crazy for a while there. And 16% put Nacho, which I'm very proud of, because I will always answer Nacho in all things, even if I know it's wrong.
I answered Nacho. Do you see more insurers coming into the space because there is business to be had?
I'll let you guys answer that.
Yeah. So we're seeing this is kind of a trick question, because there's so many insurers that are already involved. Okay. And then it's kind of like a pyramid scheme. Just saying, you're going to get resellers in a way, like MGAs. So think of taking that product that is Travelers Insurance or Chubb or names that we know, given a level of authority to go represent that same product with a new coat of paint on it, maybe with some new rules around it, maybe some slightly different rating, but it's still that product. We're seeing more variations of that. Like, I'm in recent research, I'm finding a lot of new managing general agents, which are what I just talked about. In a world where capacity is still kind of being like the pearls are still being clutched, meaning those that are paying the bills, the reinsurers, they're still capping losses. They're basically saying, look, this is still not stable, so they're still putting caps on it. But those that are underneath them are saying business has been going well now, right? So they've come out of a lot of pain. They basically had to climb out of the hole from 2020 to 2021. And there is some stabilization in those that they're witnessing that are adopting the right security controls. Those that are not, we're also seeing a lot of horror stories of those like doing, massive non-renewals because there's no change, right? But we're finally seeing a reward of those that are going towards the waters they want people to swim in from a security posture standpoint.
Okay. No,
And Andy, I don't know if you have anything to add from what you're witnessing out there.
No, that you're 100% right. But I mean, let's think about why it is, I mean, pre-COVID, we're asking 4 questions on a cyber insurance app, right? I mean, it's like, are you in the marijuana industry? Have you had a loss in the last 2 years? Oh, both of those are no. Wonderful. What's your revenue? How many employees? Here's your quote, $1,800 for $1 million in coverage, right? And obviously, when you underwrite that poorly, that's where you get those crazy loss ratios for 2020 and 2021, right? So, I mean, Becky, to your point about more insurers, I wouldn't necessarily say, I mean, there is more, right? But I mean, I hate to use this word, but better, right? Because a lot of folks that had so much skin in the game and they had a lot of premium out there that was really poorly underwritten, they got smoked in 2020 and 2021 because they didn't, they didn't underwrite their business, right? So a ton of claims come in, right? So what's happening past that? They've got to get that money back, right, to stay afloat. So you see increase in premiums, increase in deductibles, exclusions, sublimits. I personally have never seen the boogeyman of, we're not going to pay out, but I have seen folks kind of pare down their coverage to where they don't have to pay out as much in the aggregate, right? Well, there's been a decent amount of folks that have entered the game post-COVID where we've started underwriting better, right? So they've come in kind of after the bloodbath. They've come in with, again, painting with a broad brush, smarter underwriting practices, better questions, things like that. They kind of learn from the mistakes of the folks that were heavy in the game 2015 through 2020. So they're able to compete at lower premiums, lower deductibles, more expanded coverages because they quote unquote learned from the sins of the father. I mean, honestly, that's what I see on my end.
Yeah. And you've got carriers now that, I'm going to pick, I try not to throw names in there, but big ones that if I said the name, you'd be like, I've heard of them before. Yeah. That either they decided when things got really, really, really dicey, they backed out on their cyber, but cyber was one of 50 different tentacles in their business operations, right? They're generalist insurer. They write everything. And in cyber, they were like, that seems kind of crazy. Let's just pull out of that for a little bit. And then you got those that said, they basically said the same thing, but with a different action. They said, you know what? We will just require the world and it'll be really hard to get, our product. And we're not going to change the price, right? We're not going to be price competitive. So like if someone gets it, they're going to have to pay a lot, which is basically them backing out as well, just in a different way. We're seeing those large traditional carriers now start to take some steps to get competitive again. Yeah. So to Andy's point, they're watching too. They're watching those that are specializing, that post-COVID said, we're going to go into this. We don't have baggage, right? We didn't lose $100 million in 2021. So we're not trying to recoup that. We're starting anew. So we're going to learn from the sins of the father. We'll start this business. It will be profitable, but it's a different methodology. They're seeing that methodology and going, oh, they're not on fire. In fact, they're doing pretty good and their clients are happy. Maybe we could do the same thing. So it's the tide that's raising all ships.
Not to name names, but we've even seen some of those traditional carriers that were heavy skin in the game that weren't competitive in 20 and 21 and were getting their doors blown off, go out and buy out, some of these new to the game folks. I mean, again, if you pay attention to the insurance industry, you probably know who I'm talking about. But I mean, there's one particular, is a very large carrier that went out and bought up one of the new entrants. So anyway.
There's a couple of questions that have come through in here that I think are good. Evan Z, what percentage of revenue is an acceptable average premium cost? I mean, okay, Becky said it before. It depends. It depends on a couple of things, right? Security, as we've already talked about. Revenue, obviously, is a piece of it, and industry is another piece of it. So it's not exactly tied to revenue, but I would say somewhere between like 0.1 and 0.4% is kind of what we see. Like, if you have $1 million revenue, sometimes we see between like $1,000 to $4,000 in premium. It can be way, I mean, there are outliers, right? So I really can't say, my advice is usually don't go to your clients and say, oh yeah, you'll probably pay about this much, because chances are they'll pay more and then they'll be upset, right? So it's really more about saying, what are those things that are, hey, know the industries that are crucial and say, hey, you're in this industry, which means you're at risk more than maybe some others. So we really need to make sure your security is good, because then hopefully we can work with an
Yeah.
insurance partner to get the cost down on the insurance, right? That's kind of the mindset here. It's all about resilience, all about maturity. I wish we could say, promise them cost savings, but it's not always the case, right? I mean, sometimes if they have trash policies, like we've talked about before, you run into issues of, oh wow, maybe we'll save money on our insurance, but they're paying like $100 for their policy. It's like, no, you're going to be paying like 10 times that amount. I'm sorry. And that's just the reality of the situation, because they need to have the right coverage too. And then maybe their limits are too low. There's so many factors. But for a standard $1 million policy for a company that has $1 million in revenue, we usually see somewhere between that $1,000 and $4,000 mark. But again, it can be more than that depending on the industry. So Brian said we're just under 0.5% as an MSP, which again, that kind of makes sense. It's higher for MSPs because of your risk. So I would definitely see that.
That's pretty good. I mean, we did. Go ahead, Reed. Sorry.
I was just going to say the industry piece, I think, is the most critical part. So if we can give a percentage, but revenue is pushing the needle, that affects price. But if you are in a high risk industry, take whatever we just said and just
grain of salt.
Put a little asterisk on it, because if you're in what the insurance industry is considering a higher risk industry, the typical rules of engagement don't apply. They're going to want to get more meticulous. And guess what? Maybe we still get between that 0.1 and 0.4, but the difference between like a little security change could make all the difference from an underwriter's perspective.
We definitely need to keep answering these questions though. Andy, maybe you can answer this one. Terry A, how would you get a favorable rate for cyber or tech E&O? Are there proactive items you can complete or prepare? So we already kind of talked about the cyber insurance piece, but what about on the tech E&O side? What kind of additional things are going to help with the tech E&O policy?
Yeah, and I mean, honestly, some of them are outside of your control. I mean, revenue's got a big piece of it, right? Pretty much know what's going on there. But the other thing is we're an E&O policy, and an application differs from a traditional cyber policy. They're going to ask things like, who are your largest contracts, right? And what's the value of those largest contracts? That question is not getting asked to your average cyber policy holder, right? So if you roll in and you say, man, we've got 90% of our business in healthcare, it's not that you can't get a policy. You're just going to pay a pound of flesh for it, because you're protecting PHI, and that's a sector that's gotten the hell beat out of it over the last 3 years, right? If you come in and you say, hey, we're pretty displaced, across everything, our highest one is 10%, and here are our largest, everything's kind of spread out, that stuff will come in a little bit lower. I'll tell you another thing too that's going on right now. I was actually talking with a buddy about this today. Reed and I are in the midst of having conversations. If there's anybody out there that's employed by a larger MSP, one of the shifts in our industry recently has been that larger MSPs are starting to build their own security operations center, right? And just know that the guys in the hats, the bald guys with the facial hair over here, are fighting on your behalf, because historically, underwriters don't like that. And we're sitting over here going, you're okay with an RMM tool? Not to name anybody's name, but like, think back to what happened with that a couple of years ago. Everybody's got an RMM tool. You're okay with that, but you're not okay with the SOC, So there are some things from kind of where your money is placed that are evaluated, right? And then what are the actual operations of the MSP? So I would say, tighten up on your security, make sure that, we've got as many yeses as we can in there. And then the underwriters are really going to look at, where that business is placed, what your revenue is, and then what type of operations you're running at the high end.
One other thing I just want to add is, on the tech side, contractual liability does come into play in certain aspects, especially if you're a larger MSP. And I think a simple question around like your MSA, if it's a boilerplate one, you might run into some issues. If it's a customized one that you actually work with an attorney on, that's catered and customized to your business, definitely in your favor.
Last thing, and this just popped into my head, market access, period, end of story. Because everybody, when we've got like 45 plus carriers for cyber liability, we only got about 11 that want to write tech E&O, and they all view it very differently, right? So, I remember there was a day when I took a $40 million MSP to market, right? And the immediate response from one of our carriers was, yeah, we'll consider it, but we're going to be 50 grand right out of the gate for the first million, right? 50 grand in premium. That was their standard, right? We ended up writing them, for far less than that, right? So market access, E&O pricing is kind of the wild, wild west out there right now to a degree. I went to market, did a presentation this morning for an MSP that was just under $1 million in revenue. His bottom end pricing for $2 million in coverage was around $3,700. His top end pricing was around 10 grand. There's 7 grand, 6-7 grand of delta there, right? Based on market access. So making sure that you have market access and you're quote unquote fishing where the fish are, you can absolutely overspend for equilateral coverage.
That so trying to get through questions because we do have 10 minutes left. There's a lot in here. Is there a pre-policy questionnaire that you guys have that's something that could be shared in the handouts or a site or?
Yeah, I put that link in there for the review, but Andy, you could probably, when we say pre-policy questionnaire, what is, you mean like an application?
Application, is that what we're looking at? I mean, on the cyber end for the clients of the MSPs, that's going to look like Lord of the Apps for us, which is, and I mean, biased, in my opinion, I think it's the best one out there, right? It's digital. It goes out to 45 markets. It tells you what the key controls are on the front end. There's room to get past the binary yes, no, and explain what you're doing. Like we are very, very proud of Lord of the Apps, right? So there's that. On the E&O side, we're currently in the process of developing like a Lord of the Apps version for E&O. Really what it comes down to on the E&O side is those revenue bands that we talked about. We know what carriers we have that like to play over 20 million. We know which ones that like that middle market from 5 to 20, and we know which ones like 5 and south. So based on your revenue, we'll supply you with the application that's most customized fit to your exposure on that. And it'll be in PDF form for the time being based on revenue.
That said, reach out to one of us after the fact. We can pull you and like just a standard carrier app so you can kind of see the types of questions they'd be asking.
Yep.
But we can also talk you through like what we were just talking about, highlighting, hey, these are the things that are going to help take you to the next level on your policy. I think that's super helpful. There was a question on here I think was really good. And how realistic is it to think that a carrier would deny a claim if they find misrepresentations on the application? This is a huge fear point for a lot of people. Cyber insurance doesn't pay out, carriers won't pay claims, blah, 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 right? There's two things. I think it was either Reed or Wes. I don't remember who it was, but one of them said, carriers do not want the bad publicity of a denied claim. So let's start there. Right. Again, we just brought up the whole competition market thing. Imagine being that carrier that was super competitive, got a policy, and then it's like, oh, wow, this carrier worked really hard to bring their pricing down, and then they didn't pay a claim. It's like, guess who's never going with that carrier again? Pretty much everybody, right? So it does paint a bad picture for the carrier. So it would need to be a blatant misrepresentation. And even then, sometimes you see carriers negotiating the claim payout, not outright denying it, depending on the nature of the incident. Now, there is that incident back from 2022, I think, where Travelers denied a claim because the client said on their application that they had MFA and they didn't. And the reason that the attack happened was because they didn't have MFA. And MFA being the literal most important security measure for all of these carriers right now, if you misrepresent that, I mean, good luck. But here's my piece. Right, is when you're filling out these applications, when your clients are filling out these applications, you're spending money. And to some of the comments that I've seen, close to 1% of your revenue on a policy, that if you did not take the time to accurately convey what your security posture was, you're now throwing that money out the window. Because you're basically saying, hey, I'm going to pay $5,000 for a policy that isn't going to pay out if it actually comes to pass. So you're losing $5,000 and then probably tens to hundreds of thousands of dollars on top of that in recovery costs, potentially more. So it's definitely something to consider when you're filling out those forms, is to be as honest as possible, and understanding then that if you're honest, when the underwriter looks at that and says, hey, we'll write a policy based off of that, well, guess what? They've now entered into a contract, and you're able to point back and say, no, this was and is my security posture on here. So if they're trying to deny the claim, I'm not a lawyer, so I can't say this, but I can't say this accurately or like 100% truthfully, but At the same time, traditionally, the courts tend to side with the insured, not the insurance companies, when there's discrepancies or confusion. And if you're really clear on your security and they're trying to say, this claim is, we don't want to pay this, chances are they're going to. I mean, that's just the way that plays out.
But hearing how critical that application is just a reminder of why MSP should absolutely be a process or a part of the process when their customers are filling out those applications.
100%.
You should not be letting your customers fill those out without some input from you, because they hire you to manage their IT. They aren't going to know some of the answers to the nuance of yeses and nos, and it's too easy. Even just to have a second set of eyes on something like that because of the potential to misrepresent and be not covered.
Yep.
And there's a middle ground there, and we talk about this all the time with partners, right? Like there's here, send this app over. The MSP is scared of it. They don't want to touch it. We're going to send it to the client, and they're just going to put yes on everything to get a good premium. The other side of the spectrum is MSP fills it out for them and signs off on it. You don't want to do that either, right? The middle ground is walk through them with it, have them fill out the part that they know dead to rights, and then advise them on the tech questions that they're unsure of, right? Like meet the client in the middle there. Our legal friends will tell you, don't ever do it by yourself. Don't ever put a wet signature on it. It's not your application, but you also don't want them just cruising through and purposefully lying to try to get a premium cut.
Yeah. Or thinking that they're answering MFA, not realizing that the application is very specific about all versus just, do you have it? Because didn't it used to be that it just said, do you have it? And if one guy had it, you could be like, sure.
That's the other point. Yeah, like how that question is worded, and I know we're limited on time. I don't want to chase a rabbit here, but like most traditional
two rabbits now, Andy.
One rabbit, one squirrel. But anyway, that like the whole idea is like the old question was, do you have MFA, yes or no? What a terrible question, right? And the way we pose it on our application is where is MFA implemented, right, or enabled? Email backups, remote logins, things like that. And you should be telling a deeper, more complete story to an underwriter than yes, we have MFA or no, we don't.
That's so. In our last few minutes, let's talk a bit about where folks can find you, some of the areas that you might be educating on coming up in the near future that might be helpful for some of these deeper questions that we might not have had a chance to get to.
Yeah. First and foremost, I'm going to put a link in the chat here. Andy and I are doing a live stream tomorrow at 2 p.m. Eastern on Tech E&O specifically. We're going to dive deeper into it. We're going to talk about some important pieces. So if you want to jump on, listen to that, there's the link in the chat there. You can find probably all of us on LinkedIn. That Andy and I are both very active. Reed, I think, checks it once a year. But we all kind of look similar, so just whoever you connect with.
I just assume you take care of it well for me. So
I've tagged Reed 5 times in the past 2 weeks, and he hadn't liked any of them yet. Man, I just want to make you proud, Dad. That's all. I just want to make you proud. On the E&O side, guys, I know there've been a lot of E&O questions. E&O stuff can come to me. That can come through LinkedIn. You can go through FifthWall and fill out a discovery form and mention E&O there. There's a couple different ways that we can skin that cat, but if you got E&O questions, if you don't know what you have, if you know that you don't have it, I'm happy to set up an initial consultation there.
Cool.
And if 6 months from now you're like, shoot, I remember that I was supposed to reach out to somebody and talk about that, just message me. Or if you're a Huntress partner, ask your account manager and I'll make sure to get you connected. I had one email this morning from somebody who watched something we did a year ago. It was like, how do I get a hold of those people again? So always happy to connect you there. And then beyond that, a bit of a teaser for those of you who stuck it out with us the whole time. Cody, can you share the slide? Huntress is going on the road again. So we're going to do a series of road shows, and FifthWall is going to be a guest with us this round. So they'll be joining for these road shows. Each of the shows, it's a weekday show. They're about 4 hours long. We're going to be talking about incident readiness. So talking about those tabletop exercises, your cyber insurance, your incident response plans. FifthWall, what are you guys talking about during those sessions?
Cyber insurance for sure.
There you go. And absolutely, please take a screenshot of this. Otherwise, registration goes live on Monday for this, and we'll be in cities. And I know the names of the stadiums might look a little funky, but if you put 2 and 2 together, Pittsburgh, we're going to Steelers Stadium, or is it Heinz Field? Is that what everybody calls it?
For those in the area, it's Heinz Field, and
Yeah.
always will be Heinz Field.
Yeah.
Yes.
So make sure that you join us for those if we happen to be in your area, because one of these 3 fantastic gentlemen will be with me at all of them. So thank you all for joining us today. Will had to jump, but Reed, Andy, as always, thank you so very